Are you considering acquiring a company, but not sure what it's worth? Hi, I'm Daniel Cooper from PCE, and today we'll be looking at the 3 key factors that drive how much you are able to pay for a target company. The first factor to dive into is the financial health of the target. Areas that you'll pay attention to in this discussion will include revenue growth, profit margins, and cost structure. The most important variable in determining whether you can pay more for a business is revenue growth. If the company has a track record of getting bigger and bigger and being able to generate more and more revenue and more cash flow, then it's worth investing in. Another important variable in determining how much a particular acquirer can pay for a target is what synergies might be present. Typically, synergies fall into 2 buckets. There are cost synergies and revenue synergies. Cost synergies are typically efficiencies that can be gained when 2 organizations come together. Perhaps you don't need 2 chief financial officers. Perhaps you can merge some of the accounting and administrative functions. So those help you drive profit to the bottom line. The second category is revenue synergies, and that can be where the target and the acquirer can get together and can cross-sell each other's products so that 1 + 1 = 3. The value that you're able to pay for a company will be diminished based on the number of risks present. Risks typically fall into 2 categories: financial risks and legal risks. Financial risks tend to be represented by liabilities on the balance sheet. That might be debt owed to a bank. It might be amounts owed to creditors, such as vendors. And the bigger those liabilities and the sooner that you have to repay them, the more financial risk that a business has, and therefore the less that you would be able to pay for that particular business. The second category often isn't reflected on the balance sheet, and that could be legal liabilities. To give you an example, there might be an ongoing court case where the amount that needs to be paid to the person suing the company has not yet been determined. If that court case settles for a substantial award, that liability will be recognized and there will be a cash outflow from the business. So it's important to pay attention to the risks and the potential negative cash flows that can be associated with those dangers. Today we've covered the 3 key factors that will help you price an acquisition. One of the most important factors to dive into is a consideration of the risks. My colleague Jim recently put together an article looking at acquisition red flags. It's pinned as the top comment. So if you're curious about the types of risks that you want to consider within an acquisition, click that article and read more. If you're ready to dive deeper into acquisition strategies, contact us today. At PCE, we're here to help you make informed, confident decisions.